This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, July 21st, 2015. Euro dollar. So the market has now just taken out some key support at 108.19. That was the low going back to the May 27th, with the break now potentially exposing further weakness towards that 2015 multi-year low from March at 104.62. At this point, though, we would need to see a daily close below 108.19 on Tuesday to confirm the downward bias and accelerate declines down towards 104.62. But the overall downside pressure remains intact, with the downtrend firmly intact, and only a break back above highs that we saw going back to the 10th of July, which come in at 12.16, would compromise or take the immediate pressure off the downside in the euro. Sterling dollar. So cable has done a good job of recovering in recent sessions off of lows that we saw, which came in around the 153.50 area. There is a prospect now for a higher low in place at 153.50 above that low that we saw at 151.70 from the 1st of June in favor of a fresh upside extension back above the recent 2015 high at 159.30. But with the market trading in the middle of a range right now, it would be negated on a break back below the recent low at 53.50, which would expose a retest of that 151.70 recent low. So at this point, the overall outlook is kind of neutral in the short term, and we're going to need to see either a break back below 153.50 or above the 2015 high at 59.30 for clearer directional insight. Dollar yen. So dollar yen has been rallying significantly over the past several sessions since basing out what appears to be a potential higher low in the 121.30 area from back on the 8th of July. But at this point, the market is coming into some stiff internal resistance in the 124.50 area, and we need to see a close above 124.50 to open the door for fresh upside back towards that critical multi-year high from the 5th of June at 125.85. However, if we see a break and close back below 123.70 on Tuesday, this would take the pressure off the top side and suggest that the market is still ready for additional consolidation or correction over the coming sessions. Again, it's worth noting that on a monthly basis, the dollar yen chart is quite overbought. Euro Swiss. So Euro Swiss has been confined to some tight consolidation in recent trade, although the market looks like it could be in the process of a longer term recovery off that 102.35 low that we saw going back to April of this year. But at this point, we do need to see a break back above 105.75, the high from the 4th of June, to confirm the recovery outlook and accelerate gains back for a retest of the 108.15 high from February. Aussie dollar. So Aussie remains locked within a well-defined downtrend, and the market is now fixated on a test over the coming days of a measured move objective in the psychological barriers at 70. At this point, any rally should be very well capped ahead of the 78 area, while a lower top is ideally sought out somewhere in the 76 area if we do see any corrective upside in the sessions ahead. Dollar CAD. So dollar CAD has been on a clear uptrend over the past several sessions, with the market breaking to fresh multi-year highs above the previous 2015 peak at 128.35 and now focused on a retest of the 130.65 2009 high. At this point, we've stalled out just shy of that 30.65 high on Monday, but the market is expected to test this level over the coming sessions. Still, daily studies are now overbought, so a pullback of some form over the short term should not be ruled out, but any setbacks are expected to be very well supported ahead of the 126 area. Kiwi dollar. So finally, a nice little reversal day in Kiwi dollar on Monday after the market had broken down to fresh multi-year lows in the previous week, just under 65. At this point, there is risk for additional corrective upside, potentially back towards the 68 area, although the overall downtrend remains firmly intact and a fresh lower top is sought out ahead of the next major downside extension below 65. SPX 500. So the S&P 500 has been very well bid since basing out back in early July, and the market is now back to testing the record highs from May at 2137. A break above 2137 will negate the outlook for a potential top and open the door for an acceleration of gains towards 2200 further up. However, if the market is unable to establish a close and fresh record highs above 2137, this would suggest that the topping outlook is still intact in favor of another bearish resumption back down and eventually below that critical March low that comes in at 2040. Gold. So gold had a wild day on Monday with the market breaking down to fresh multi-year lows below 1100, although we've since seen a bit of a consolidation back around the 1100 area. However, the break is quite bearish, and there is the possibility now, if the market breaks back below that low that we saw, that extreme low in the 1070s from Monday, that it could open the door for a fresh downside towards major psychological barriers at 1000 further down. At this point, we'd need to see a break back above the 1175 area at a minimum to take the immediate pressure off the downside in the gold market.